There's so much misunderstanding about tariffs, especially with Howard Lutnick. And I've been posting a lot on X. He follows me. He doesn't follow that many people, maybe about 120 people. So I'm hoping that he'll actually read some of my posts so he understands, because he's got it completely wrong about tariffs. I mean, first of all, yes, he talks about, and so does Donald Trump, the good old days, in the 19th century when we only had tariffs. And he concludes that the reason the economy was so good back then is because we ran on tariffs. That's not exactly it. I mean, its logic is a little faulty. The reason we had a strong economy in the 19th century was because we had a tiny government. The government was so small that we could afford it on tariffs. So, that's why we didn't have an income tax, because we didn't need an income tax. So today, the government is much bigger because of the income tax. And what Howard Lutnick also doesn't understand is the reason we have an income tax, the agitation to get it. It was part of the populist movement to shift the burden of taxation from the working class to the rich. And everybody knew back then, when the country ran on tariffs, who paid them. It was the middle class and the poor who bought the products that were tariffed. And so we sold, or the government sold, the country on the income tax as a trade-off for the tariff. They said, hey, we can get rid of these tariffs that you have to pay, and we'll have income taxes that the rich are going to pay. And that was an impetus for it. Of course, now the middle class are taxed at rates far higher than anything envisioned for Rockefeller or Vanderbilt or Carnegie or those guys. But at least people understood tariffs. Lutnick has no clue, right? He keeps talking about the External Revenue Department as if these tariffs are going to be paid by Canada and Mexico or China. They're not. We can't tax those countries. All of the money that comes in from tariffs, every penny of it, whatever the government collects, comes out of the pocket of American consumers. That's it. It's like a sales tax, right? When you go and you buy something, there's a sales tax. The store doesn't pay the sales tax. You pay it. It's added to prices. Same thing with tariffs. The tariffs are paid by the importer, not the exporter. Whatever company imports the product pays the tax. And then that tax gets passed on to the consumer in the price. That's it. Very simple economic. Now, we need higher taxes because we're running huge deficits. So, in that respect, the tariffs will help shrink the deficits. But they are a tax hike, and people are going to be impacted. It's going to increase the pressure on American families who are struggling right now. They're going to struggle more as a result of these tariffs. It's not going to bring manufacturing home. I mean, not anytime soon. And even if we brought manufacturing home, how are we going to finance that? I mean, you can't manufacture without factories, so you got to build the factories before you can make anything. But also the factories need supply chain. We don't have those. We've got to reestablish those. So to recreate the industrial base that we no longer have is going to take many, many years, maybe a decade, and require a huge sacrifice. We have to finance the build out, and then we have to train the workers or build the robots or whatever. But it's going to take a lot of resources, and that means we have to stop spending and start saving. That means we're going to get higher interest rates. That means we got to get much lower stock prices and real estate prices. That means we go through a huge recession. That means we have a lot of bankruptcies and defaults, and cuts to government spending. So all of this stuff will help in the long run, but it's going to be really painful in the short run. And nobody is prepared for that. Donald Trump is telling everybody it's going to be fantastic. It's a golden age. It's going to be very difficult because we're going to be in a huge recession very quickly. And the question is, are they going to stick to it, or are they going to go back for stimulus? Okay, cut rates, print money. We got to stimulate now. We're in a recession. And that's going to send already soaring inflation through the roof.
There is so much misunderstanding about tariffs today, especially among so-called experts who should know better. I've been posting a lot about this on X, formerly Twitter, hoping some of the people peddling this nonsense, like Howard Lutnick, might actually read what I'm saying. He follows me, so the odds are better than zero, because he, like so many others, is completely wrong about tariffs. And I don't mean slightly off, I mean completely backward. Let's start with the good old days argument, which both Howard and Donald Trump like to reference. The 19th century, when America supposedly thrived under a system financed solely by tariffs. Now it's true. Tariffs were our only form of federal revenue at the time. We didn't have an income tax until 1913, but what they get wrong is why that worked. It wasn't because tariffs are inherently great, it was because government was small. You could fund it with pocket change. There was no bloated welfare state, no endless entitlement programs, no military-industrial complex sucking up trillions. A minimal government meant minimal funding needs, and tariffs were sufficient. Now let's contrast that with today's reality. The federal government is a behemoth. It's approaching $40 trillion in official debt, not even counting unfunded liabilities like Medicare and Social Security. We can't go back to tariffs alone unless we shrink the government down to 1/10 of its current size, which, by the way, I fully support. But until we do that, tariffs can't shoulder the burden alone. And the reason we even have an income tax today? It wasn't because someone thought it would be more efficient or fair. It was born out of class warfare. It was the populist movement saying, hey, let's stop taxing the working class through tariffs and start taxing the rich. Back then, Americans understood that tariffs were regressive. They hurt the poor and middle class the most because they taxed consumption, basic goods people needed to survive. That's why the income tax was sold as a rich man's tax. Of course, like every government program, it metastasized. Today, the middle class is taxed at rates higher than Rockefeller, Carnegie, and Vanderbilt ever dreamed of. Now, what really frustrates me is that people like Lutnick, and Trump, by the way, don't seem to grasp the basic economics of tariffs. They talk about tariffs as if there's some sort of magic revenue machine that other countries pay. Wrong. They're not external revenue. They're internal. Americans pay the tariffs, not China, not Mexico, not Canada. If I import a widget from China and there's a 25% tariff on it, I pay the tariff, and then I pass the cost on to you, the consumer. That's how business works. Tariffs are sales taxes, period. So when Trump says, we're going to impose massive tariffs on Chinese goods, what he's really saying is, we're going to raise taxes on American consumers. That's the truth. He's taxing the very people he claims to be helping, working class Americans trying to make ends meet. Prices at Walmart will go up. Target will raise prices. Everyday goods will become less affordable. It's a stealth tax, and it's deeply regressive. Now, I get it. We need revenue. We're running $2 trillion annual deficits. In that context, tariffs can reduce the deficit, but only in the same way that raising income taxes would. It's just a different way to tax the same people. The difference is that tariffs are more hidden, which makes them politically palatable. The idea that tariffs will magically bring back American manufacturing is another fantasy. You can't just slap a tariff on Chinese electronics and expect factories to pop up in Detroit overnight. We've been deindustrializing for decades. You think we can reverse that in 12 months? It'll take at least a decade and a lot of pain. You'd have to build factories, retrain workers, rebuild supply chains. None of that happens quickly or cheaply. And by the way, who's going to pay for all that? Building a factory takes capital. Retooling infrastructure requires savings. But Americans don't save. We consume. We live paycheck to paycheck. We run up credit card debt. You can't finance a manufacturing renaissance on credit cards. You need real capital. And to generate capital, you need austerity. You need savings. You need higher interest rates. You need lower stock prices, lower real estate prices. All the things politicians don't want. So yes, maybe one day we'll have thriving manufacturing again. But in the short term, it means recession, bankruptcies, unemployment, and financial pain. And that's the part no one wants to talk about, least of all Donald Trump. He's out there selling a fantasy, telling people we're going to have a golden age the minute we impose tariffs. It doesn't work that way. It's like dieting. You can't eat donuts for 20 years and expect a six-pack by next Tuesday. You've got to suffer. You've got to give up junk food, go to the gym, endure some pain. That's how you build real health. It's the same with the economy. We need real reforms, spending cuts, entitlement reform, higher interest rates, restructuring of debt, sound money, and yes, we need to end the Fed. But all of that means pain, temporary pain for long-term gain.
He has the right idea. Like the end of his State of the Union address was beautiful, very well written, very libertarian sounding message of restoring American freedom and shrinking government and doing all that. And I would say, you're right. That's what we need to do. And here's what has to happen to accomplish that. And what you need to do is you need to have a fireside chat, kind of Jimmy Carter style, only with a little bit of a better message. But you got to have a chat, and you got to level with the American public and say, you know what? I had a talk with Peter Schiff, and here's what we got to do, right? And I know I promised a golden age in America. We're going to have one, but it's going to be maybe 5 years into the future, right? But before we can get to that promised land, we got to have a few years wandering in the desert, right? And here's what we're going to do, right? We got to cut Social Security, we're going to cut Medicare, we're going to cut, we're going to cut government's pensions. A lot of people are not going to get any Social Security at all. I'm sorry about that. But we're going to means test it. We're going to have a way to make sure that the poorest among us, have something. We're not going to let anybody starve, but, we're not going to let you, pay your country club dues with Social Security. You're just going to have to keep working or something out. We don't have the money. Got to get rid of Obamacare. We're going to close down all these departments, education, energy, housing, and I forget. I'd say 3/4 of the government departments. We probably could shrink it down to maybe 5 or 6 of them left. We're going to get rid of all of our subsidies. No more agriculture subsidies. No more corporate welfare. We're going to slash defense spending. We're going to get rid of at least half. We're going to go, we got to cut government pensions. We got to make government a lot smaller. I know that's going to be a problem for a lot of people who are dependent on government, but the government's broke. We don't have the money. And the other thing that I would say is, look, we have $38 trillion of debt. Can't afford it. So we're going to restructure it. People are going to lose money who own U.S. treasuries. Sorry, we can't pay it back because interest rates have to go up, right? Rates need to go up. We're going to get rid of the Federal Reserve. We're going to privatize money again the way it was before the Federal Reserve. Interest rates are going to be determined by the free market, not by a central Politburo of government planners at the Fed. Rates are going to go up. And of course, we can't afford to pay interest on the treasuries when interest rates go up. So we're going to have to restructure.
Let's not sugarcoat it. What we're heading into is not your garden variety slowdown. It's not a soft landing. This is a full-blown economic reckoning, decades in the making. And it's about time people wake up to the truth. Tariffs, as we discussed, are not the solution. They are a symptom of a desperate government trying to raise revenue without telling the truth about what's really going on. And the truth is ugly. We have a government that spends money like a drunken sailor, except the sailor is spending his own money. Washington is spending our money, and money it doesn't even have. We're running trillion-dollar deficits during an economic expansion. Imagine what the deficit will be during the recession. 2 trillion? 3? What happens when tax receipts plunge and spending goes up for unemployment benefits, bailouts, and stimulus checks? And what happens when we try to finance those deficits? More borrowing, more printing, more inflation. That's what we're heading for, and nobody in Washington has the spine to tell the truth. Trump certainly doesn't. He's out there selling the illusion that tariffs are going to solve everything, that they'll magically bring back jobs, boost wages, and revive manufacturing. That's not just wrong, it's dangerous. Let's walk through how this plays out. Tariffs raise prices. They act like a sales tax on imported goods. That increases costs for American families already struggling with inflation. Food, clothing, electronics, everything gets more expensive. That erodes purchasing power. Now people need higher wages just to tread water. But businesses, facing higher input costs themselves, aren't exactly eager to raise wages. Many will lay off workers or automate instead. So now you've got higher prices, stagnant wages, and growing unemployment. Sound familiar? At the same time, the Federal Reserve will be under pressure to do something, because that's what the Fed does. It reacts to political pressure. So what do? Cut rates, restart QE, print money. But that just pours gasoline on the inflation fire. The more they try to solve the problem, the worse it gets. And here's the kicker. This time, inflation is not transitory. We already tried the Band-Aid in 2020. We printed trillions, sent out checks, kept interest rates at zero, and pretended everything was fine. And we got 9% CPI inflation for our efforts. And that's using the government's dishonest math. If we used the 1980 formula, it would have been closer to 18%. So what does this have to do with gold and silver? Everything. Gold is not just a shiny rock. It's not a relic. It's money. It has been money for 5,000 years. And it's the only money that doesn't rely on the full faith and credit of a bankrupt government. That's why central banks are buying it hand over fist. They know what's coming. China knows. Russia knows. Even Poland and Hungary know. Everyone is dumping dollars and buying gold. Why? Because they see the writing on the wall. Here's a stat for you. Central banks bought more gold in 2022 than in any year since 1950, and 2023 was close behind. Meanwhile, Americans are selling their gold. The average investor is piling into meme stocks, tech unicorns, and crypto fantasies. They're listening to CNBC and TikTok influencers. They think Nvidia is the new gold. It's not. And when the bubble bursts, because it will, many of those people are going to lose everything. Now let's talk about silver. If gold is money, silver is the people's money. It's the poor man's gold, yes, but it's also a strategic metal. You can't make solar panels, electric vehicles, 5G tech, or high-end military weapons without silver. It's both a monetary metal and an industrial one. That's why the supply-demand imbalance is getting so critical. Let's look at the data. In 2023, the world produced about 850 million ounces of silver, but demand over 1.1 billion ounces. That's a shortfall of over 250 million ounces in 1 year. And yet the price of silver is still below $30. Why? Because of manipulation. Yes, I said it. The COMEX and LBMA, London Bullion Market Association, are suppressing the price of silver with paper contracts. They're selling silver they don't have to people who don't want delivery. It's all a game of derivatives. But that game is reaching its end because more and more buyers do want delivery. Sovereign wealth funds, foreign central banks, even retail investors. They're standing for delivery. They want the metal, not the paper. And the vaults are emptying. Take India, for example. They've imported over 800 million ounces of silver in just the last 5 years. That's more than the entire combined inventories of COMEX and the LBMA. Where is that metal coming from? It's being drained from the West, from ETFs, from vaults, from bullion banks who thought the public would never call their bluff. Let me tell you something. You can fake a lot of things. You can fake numbers. You can fake narratives, but you can't fake physical inventory. And when the day comes, and it's coming, when the vault is empty and someone stands for delivery, and the bullion bank can't deliver, the entire game unravels. That's when silver explodes. Not 30%, not 50%, but 300%, 500% or more. Silver hit $50 an ounce in 2011 when gold was around $1,900. Today, gold is pushing $3,000 and silver is still under $30. That is a massive disconnect. The gold-silver ratio is around 85 to 1. Historically, that ratio has been closer to 15 to 1. Some people even argue it should be 8 to 1 based on mining output. So what happens when that ratio mean reverts? You're talking about silver going to $100, $150, maybe even higher, especially when you factor in industrial demand and dwindling supply. Now let's pivot to what this means for investors. If you're listening to this and thinking, well, Peter, this sounds terrifying, you're right. It is. But it's also a massive opportunity. While most people are staring at the S&P 500 and chasing the next meme coin, smart money is quietly loading up on gold and silver. Mining stocks are still undervalued. Gold stocks are trading at PE ratios of 8 or 10, while tech stocks are pushing 40, 50, even 70. That's insanity. These gold and silver companies are printing cash. Their margins are enormous at current metal prices. And if gold goes to $4,000 and silver to $100, those margins go vertical. Some of these stocks could 5x or 10x, and most people will completely miss it. Let me give you a historical example. In the 1970s, gold went from $35 to $850, over 20 times. Silver went from $1.50 to $50. That's a 30-bagger. During that time, mining stocks like Homestake Mining skyrocketed. Some went up 10x, 20x, even 50x. We're setting up for a similar scenario now. And here's the kicker. When gold and silver explode, It won't be because people suddenly fall in love with precious metals. It'll be because they lose faith in everything else. That's how it always happens. A crisis of confidence, a run on the dollar, a loss of trust in government. That's what brings gold and silver back into the spotlight. So what can you do? First, get educated. Stop listening to the talking heads on TV. They didn't see 2008 coming, and they won't see this coming either. Turn off CNBC and start reading Austrian economics. Read Rothbard. Read Mises. Read Ron Paul. Understand the roots of sound money. Second, buy physical gold and silver. Not ETFs, not futures, not promises. Get the metal in your possession. That's your insurance. That's your hedge against a system that is mathematically doomed. Third, look at mining stocks. Not as a core holding, but as an asymmetric bet. These are high-risk, high-reward plays. Do your homework. Look at balance sheets. Look at jurisdictions. Look for companies with proven reserves and good management. Don't chase penny stocks unless you're prepared to lose everything. Finally, prepare mentally. This transition won't be smooth. We're going to see political upheaval, civil unrest, possibly even geopolitical conflict. The end of a currency regime is always chaotic, but if you're prepared, if you have real assets, if you understand what's happening, you won't just survive, you'll thrive. To wrap this up, yes, it's going to be painful. Yes, there will be sacrifice. But the sooner we embrace the pain, the sooner we can rebuild. We can have a golden age, like Trump says, but only after we go through the fire. And gold and silver will be our lifeboats through the storm.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.